The call came in at 7:14 on a Thursday morning. I was on my second cup of coffee. I had nowhere to be. The number was Callaway. The main line. Not a cell, not a direct extension. The main corporate line, the one that routes through the receptionist and requires someone to physically pick up a handset and dial out. Nobody calls from the main line unless they don't want the call on their personal record. I let it ring 4 times. Then I answered. The voice on the other end belonged to a man who, 72 hours earlier, had been telling a room full of executives that the future of Callaway Financial Services was finally within reach. That the old way of doing things was behind them. That the company was ready to move forward. He said, "Elaine. It's Derek. Derek Voss." I said, "I know." He said, "We have a situation." I said, "I know." He said, "The client transaction database. There's been a..." "Derek," I said. He stopped. "My consulting rate is $400 an hour," I said. "Minimum engagement of 40 hours. Retainer due before I open a single file." Silence. Not the comfortable kind. "My name is Elaine Voss. I am 44 years old, and for 10 years I was the senior database architect at Callaway Financial Services, a mid-sized investment advisory and wealth management firm based in Charlotte, North Carolina. We managed portfolios for high-net-worth individuals and institutional clients across the Southeast. At our peak, we were managing $2.3 billion in assets under advisement. The database infrastructure that supported every transaction, every client record, every regulatory filing, every audit trail, I built it. Not metaphorically. Literally. When I arrived in 2014, Callaway was running client data on a patchwork of legacy systems that had been stitched together over 15 years by people who had since left the company and taken their institutional knowledge with them. The data was fragmented, inconsistent, and in 3 separate cases, actively wrong in ways that had already generated 2 client complaints and 1 near miss with a FINRA audit. I spent 14 months rebuilding it from the ground up. The result was what I called the Callaway Integrated Client Record System, CICRS, which the team pronounced Seekers because database architects have a specific kind of humor. It was a unified database architecture that consolidated every client record, every transaction history, every compliance document into a single, auditable, version-controlled environment. It had automated reconciliation built in, which caught discrepancies before they became errors. It had a tiered backup protocol that ran every 6 hours. Seekers prevented an estimated $4.1 million in data errors and compliance penalties in its first 4 years. I also built the Callaway Regulatory Reporting Engine, the system that automatically generated the quarterly and annual filings required by FINRA and the SEC. Before I built it, those filings were assembled manually by a team of 3 analysts over 2 weeks. After I built it, the same filings were generated in 4 hours with a single review pass. That system saved Callaway approximately $380,000 per year in labor costs. I missed my sister's wedding rehearsal dinner in 2017 because a data migration had gone sideways at 11 p.m. on a Friday, and I was the only person who knew how to roll it back without losing 3 months of transaction records. My sister understood. She said, "You'll make it up to me." I was at the wedding. I made it up to her. I tell you this not to impress you. I tell you this so you understand what was in the room when Derek Voss looked at my system and called it outdated. His full name was Derek Voss. He was 38 years old, and he had married Callaway's founder's daughter, a woman named Stephanie Callaway Voss, in 2021. He had spent the previous 6 years working in technology consulting, which is a field that teaches you to make PowerPoint slides about digital transformation without necessarily understanding what transformation requires in practice. He wore slim-fit suits in colors that were slightly too bold for a financial services firm, a deep burgundy on his first day, a forest green on his second. They fit well, which distinguished him from most people who dress to impress in corporate environments. The clothes were not the problem. The problem was what he said when he wore them. He arrived as Director of Technology Operations in March. His first week, he scheduled one-on-ones with every member of the technology team. Mine was on a Wednesday afternoon in his office on the third floor, which had previously been a conference room called Meridian and which he had converted into a private office without asking facilities or anyone else. He said, "Elaine, I've been reviewing the infrastructure documentation." I said, "Good." He said, "CACRS is impressive work. For its time." I looked at him. "For its time," I said. He said, "The architecture is fundamentally monolithic. In today's environment, we need something more agile, more cloud-native, more scalable to the kind of growth trajectory Callaway is targeting." I said, "CICRS is cloud-hosted. It has been since 2019. He said, "Right, but the underlying architecture is still legacy pattern. We need something built for the modern data ecosystem." I said, "What specific limitations are you seeing?" He said, "It's more about strategic positioning. We want to be forward-leaning on our data infrastructure." I said, "What specific limitations are you seeing?" He looked at me. He said, "I think we're going to bring in an outside firm to do a full assessment." I said, "I'd recommend including the compliance team in that assessment. CICRS has regulatory filing dependencies that any replacement system would need to replicate exactly." He said, "Absolutely. We'll loop everyone in." He did not loop everyone in. The outside firm was called Nexus Data Solutions. They were based in Atlanta, and they had been recommended by Derek's former consulting firm, which is the kind of recommendation that tells you more about the relationship than the capability. Their lead consultant was a man named Brad, who was 32 years old and used the phrase data democratization in his first presentation without defining it. Our head of compliance, a woman named Loretta Huang, pulled me aside after that presentation. She said, "Elaine, did he just say the new system would democratize our data access?" I said, "He did." She said, "What does that mean for our FINRA audit trail?" I said, "I don't know. I wasn't asked." She said, "Should we be worried?" I said, "I've been worried since March." The Nexus assessment took 6 weeks. At the end of it, they presented a proposal for a complete replacement of CICRS with something they called the Nexus Unified Data Platform, NUDP, which nobody on my team could say with a straight face. The proposal was 47 slides. It included a lot of graphics about cloud architecture and a timeline that called for a full migration and go live in 16 weeks. 16 weeks. CICRS had taken 14 months to build correctly. I submitted a written objection on May 12th. It was 4 pages. It documented 7 specific technical risks in the Nexus migration plan, including the absence of a parallel run period, the inadequate data validation protocol, the incomplete mapping of regulatory filing dependencies, and the fact that the proposed backup architecture ran on a 24-hour cycle rather than the 6-hour cycle that CICRS used, meaning that in the event of a failure, Callaway could lose up to 24 hours of transaction data. I sent it to Derek, to the CFO, and to the General Counsel. Derek responded the following day. His email said, "Thanks for the detailed feedback, Elaine. We've shared your concerns with the Nexus team, and they're confident the migration plan addresses these risks. We're moving forward with the timeline." I read that email 3 times. Then I printed it. I printed every email in the chain. I printed my 4-page objection. I printed the Nexus proposal. I printed the meeting notes from every technology review session I had attended since March. I put them in a folder. I labeled the folder with the date. I took it home. Not because I had decided anything. Because I had been in this industry for 16 years and I understood what happens when someone confident and wrong is also in charge, and I believed in having the documentation before you need it rather than after. I submitted a second written objection on June 3rd, after the Nexus team presented their revised migration plan, which had addressed 2 of my 7 concerns and ignored the other 5. I sent it to the same distribution list. Derek did not respond to the second one. Our senior data analyst, a man named Paul Reyes, who had been on my team for 6 years and knew CICRS the way a mechanic knows an engine he has rebuilt twice, stopped by my desk after I sent the second memo. He said, "Did you hear back?" I said, "No." He said, "Elaine, they're not going to listen." I said, "I know." He said, "So what do we do?" I said, "We document." He said, "And then?" I said, "We wait." He looked at me for a moment. He said, "You don't seem worried." I said, "I'm not." He said, "Why not?" I said, "Because I'm not the one making this decision." He thought about that. He said, "That's either very zen or very scary." I said, "Probably both." The go-live date was set for the first Monday in September. On the Friday before, Derek sent a company-wide email with the subject line, "Exciting news. Callaway's new data platform goes live Monday." The email included a graphic of a rocket ship. I read it at my desk. I saved it to the folder. I went home. The termination meeting happened on a Tuesday in late July, 6 weeks before the go-live date. The room was called Pinnacle. Second floor, interior room, no windows. The kind of room that exists in every corporate building for the specific purpose of having conversations that nobody outside the room should be able to see happening. Derek was there. The HR director, a woman named Sandra Obi, was there. The CFO, a man named Robert Finch, was in the doorway for approximately 45 seconds before he found somewhere else to be. Sandra said, "Elaine, we're making some changes to the technology leadership structure." I said, "I see." She said, "Your position as senior database architect is being eliminated, effective today. We're offering a severance package of 8 weeks of base salary." I said, "8 weeks?" She said, "Yes. We'd ask that you complete a knowledge transfer with the Nexus team before your last day, which we're setting as..." "No," I said. Sandra stopped. Derek said, "Elaine, the knowledge transfer is a standard part of the..." "I've submitted 2 written objections to the migration plan," I said. "Both are on record. I've documented every risk I identified. That documentation is available to anyone who wants to review it." I looked at Derek. "The Nexus team has the system documentation. Everything I built is documented. If they need more than that, the problem is not my documentation." Derek said, "We're asking for a professional." "Sandra," I said. She looked at me. "I'll review the severance agreement with my attorney," I said. "You'll hear from me by end of week." I stood. The room was cold. The kind of cold that comes from aggressive air conditioning in a room with no windows. The kind that makes you aware of your own skin. Derek said, "Elaine, I want you to know this isn't personal. It's about the direction of the company's technology strategy." I picked up my bag. I said, "Good luck with the go-live." I walked out of Pinnacle, down the second-floor hallway, past the open workspace where Paul Reyes was at his desk. He looked up. He saw my bag. He saw my face. He started to stand. I shook my head once. He sat back down. I took the elevator to the lobby, walked through the glass doors, and sat in my car in the parking deck for 4 minutes. Then I called my attorney. What they did not know, what Derek Moss, in his forest green suit, with his rocket ship email and his Nexus data solutions and his 16-week timeline, did not know, was that I had been preparing for this specific outcome since May 12th. Not because I am pessimistic. Because I am precise. The folder I had taken home in May contained something more than printed emails. It contained a complete, personal copy of every piece of documentation I had ever produced at Callaway Financial Services. Every system design document. Every risk assessment. Every objection memo. Every version of the CICRS architecture documentation, updated through the most recent quarterly review. I had not taken any of it improperly. Every document I copied was work product I had authored, and I had maintained a personal professional archive throughout my tenure at Callaway. A practice I had started in 2016 after a project dispute had taught me that institutional memory is only as reliable as the institution. The archive was on an encrypted external drive at my home office. It was also backed up to a private cloud account that had nothing to do with Callaway's systems. What the archive contained, specifically, was this: a complete record of every risk I had flagged, every date I had flagged it, and every non-response or dismissal I had received in return. It was, in effect, a documented timeline of exactly what I had warned would happen and exactly when I had warned it. My attorney, a woman named Claire Ashford who specialized in employment and intellectual property law and had been recommended to me by a colleague in 2022, reviewed the severance agreement in 2 days. She called me on Thursday. She said, "The severance is standard. 8 weeks, non-disparagement clause, standard IP assignment." I said, the IP assignment. She said, they want you to assign all intellectual property created during your employment. I said, CICRS. She said, yes. I said, CICRS is already assigned. I assigned it in my original employment agreement. They own it. She said, right? But the new agreement is written broadly enough to potentially capture the documentation methodology, the way you structured the risk assessment framework, the audit trail architecture. I said, that's my professional methodology. I've used it at every company I've worked at. She said, I know. I'm going to push back on the language. I said, good. She said, Elaine, what do you think is going to happen with the new system? I said, I think it's going to fail. She said, how badly? I said, badly enough that they'll call me. She was quiet for a moment. She said, and when they call? I said, I'll have a rate ready. She said, for 100 an hour? I said, for 100 an hour. She said, that's 3 times your current effective hourly rate. I said, yes. She said, okay, she said. I'll get the severance language cleaned up. I signed the revised agreement on Friday. I cleaned out my desk on Monday morning before the Nexus team arrived for their pre-go-live setup. Paul was already at his desk. He watched me pack. He said, you're really leaving? I said, I already left. This is just the logistics. He said, Elaine, what's going to happen? I said, read my second memo. The one from June 3rd, read section 4, specifically. He said, the data validation gap. I said, yes. He said, you think? Paul, I said, keep your personal copies of everything you've worked on. Your own work. Nothing proprietary. Just your own contributions. He looked at me. He said, how long do you think we have? I said, the system goes live Monday. I'd give it 72 hours. He said, that's very specific. I said, I know the data volume. I know the validation gap. I know what happens when you run 3 years of transaction records through an unvalidated migration without a parallel run period. He said, what happens? I said, you find out what you missed. I picked up my bag. I said, take care of yourself, Paul. He said, Elaine. I walked to the elevator. The lobby was quiet. The receptionist, a young woman named Keisha who had been at the front desk for 2 years and always had a kind word, looked up when I came through. She said, Ms. Voss. Are you? She saw the box. She said, oh. I said, take care, Keisha. I walked to my car. The Nexus Unified Data Platform went live on Monday, September 9th. I know the exact time because Paul texted me. They cut over at 8:02 a.m. Champagne in the conference room. Derek gave a speech. I read the text. I set my phone down. I went for a walk. By Tuesday afternoon, Paul texted again. He said, reconciliation errors on the Q2 transaction batch. Nexus team says it's a data normalization artifact. They're working on it. I read that text too. I did not respond. A data normalization artifact is what you call a data error when you don't want to say data error. It is the kind of phrase that sounds technical and means nothing, which is the specific language of people who are trying to buy time while they figure out what they actually broke. I had documented the data validation gap in section 4 of my June 3rd memo. I had described, in plain language, what would happen if the migration ran without a proper validation protocol. Transaction records from the legacy system would be mapped incorrectly to the new schema, creating discrepancies that would not surface immediately but would compound over time as the system tried to reconcile them. I had used the phrase cascading data integrity failure. I had used it in writing. On June 3rd. By Wednesday morning, Paul's texts had stopped being informational and started being something else. He said, Elaine, it's not just Q2. They're seeing errors across Q1 and Q3 as well. 3 years of transaction records. The Nexus team has been on a call with their engineers since 6 a.m. I read that. I said, how many client accounts? He said, they don't know yet. They're still running the scope assessment. I said, what does Derek say? He said, Derek hasn't come out of his office since 9. I said, what does Robert say? Robert Finch, the CFO. Paul said, Robert is on the phone with legal. I said, okay. Paul said, Elaine, this is bad. I said, I know. Paul said, like, really bad. Like, FINRA bad. I said, I know. Paul said, what do we do? I said, you document everything you're seeing. Timestamps, error messages, everything. Your own notes, your own file. He said, and you? I said, I wait. He said, for what? I said, for the phone to ring. It rang at 7:14 Thursday morning. Main corporate line. For rings. Derek said, Elaine. It's Derek. Derek Moss. I said, I know. He said, we have a situation. I said, I know. He said, the client transaction database. There's been a... Derek, I said. He stopped. My consulting rate is $400 an hour, I said. Minimum engagement of 40 hours. Retainer due before I open a single file. The silence on the other end of that call was the specific silence of a man who has just understood, fully and completely, the distance between where he thought he was and where he actually is. I had heard that silence before. Not often. But I recognized it. He said, that's Elaine, that's $16,000 up front. I said, yes. He said, for a situation that we need to discuss the scope of. Derek, I said. He stopped again. 3 years of client transaction records, I said. Corrupted. FINRA reporting cycle in 11 days. How many client accounts are affected? Silence. He said, we don't have a full count yet. I said, then you need me more than you think you do. He said nothing. I said, the retainer wire transfer information is in my out-of-office reply. It went active the day I left. He said, you set up a consulting rate before. Before the go-live, I said. Yes. Another silence. Longer this time. He said, I'll have Robert call you about the wire. I said, good. I ended the call. I finished my coffee. It had gone slightly cold, but that was fine. I had been waiting for that call since June 3rd. Cold coffee was a reasonable price. Robert Finch called at 9:15 the same morning. He did not use the main corporate line. He used his cell, which told me that Robert, unlike Derek, understood exactly what kind of call this was and did not want it routing through a switchboard. He said, Elaine. It's Robert. I said, I know. He said, Derek told me about your rate. I said, good. He said, I want to be straightforward with you. We're in a serious situation and we need your help. I'm prepared to authorize the retainer. I said, wire transfer information is in my out-of-office. He said, I saw it. A pause. Elaine. How bad is it? Honestly. I said, honestly. He said, please. I said, read section 4 of my June 3rd memo. That will tell you exactly how bad it is. He was quiet for a moment. He said, I didn't see that memo. I said, it was sent to Derek, the CFO, and General Counsel. Another pause. Longer. He said, I'm the CFO. I said, yes. He said, I didn't receive it. I said, then I'd suggest you ask Derek why not. The retainer hit my account at 11:40 that morning. I opened my laptop, unlocked the encrypted drive, and got to work. By the end of the second week, the situation at Callaway Financial Services had moved well past the kind of crisis that gets managed internally and into the kind that generates outside counsel invoices and board-level emergency sessions. The technical failure was already documented. 3 years of client transaction records, Q1 2021 through Q3 2023, had been processed through the Nexus migration without the data validation protocol I had specified in my June 3rd memo. The result was what I had called, in writing, a cascading data integrity failure. Transaction amounts had been mapped correctly. Transaction dates had not. Across 847 client accounts, the date field corruption meant that the chronological record of every trade, every deposit, every withdrawal, every fee assessment was scrambled in ways that were not immediately visible but were absolutely present. The Nexus team had spent 4 days trying to fix it themselves. They had made it worse. The relational failure arrived on Tuesday of the second week, and it arrived through a client named Hargrove Capital Partners. Hargrove was a family office, a private investment entity managing the wealth of a single high-net-worth family, and they had been with Callaway for 9 years. Their account represented $47 million in assets under advisement and generated approximately $940,000 in annual advisory fees. Their relationship manager at Callaway was a woman named Dana Cho, who had managed the Hargrove relationship for 6 of those 9 years and knew their preferences, their risk tolerance, and their communication style the way a good relationship manager always does, by paying attention. Dana called me on Tuesday afternoon. She said, "Elaine, I need to tell you something." I said, "Tell me." She said, "I had a call with Hargrove this morning. Their internal accountant ran a reconciliation against our Q2 statements and found discrepancies. 17 of them. Across 4 accounts." I said, "What kind of discrepancies?" She said, "Date mismatches on trade confirmations. The trades are right. The dates are wrong. But Elaine, to their accountant, it looks like we backdated transactions." I said, "It doesn't look like backdating. It is the appearance of backdating." She said, "Yes." I said, "What did you tell them?" She said, "I told them we were aware of a data migration issue and we were working to resolve it. I told them their assets were secure and the underlying transaction data was accurate." I said, "Good." She said, "They want a written explanation by Friday. From someone senior." I said, "Who did they ask for?" She said, "They asked for you." I said, "I don't work there anymore." She said, "I know." I told them that. A pause. They said, and I'm quoting, "Then who does?" I did not answer that. Because the answer was Derek Moss and Dana, and I both knew what that meant. Derek presented to the Hargrove relationship on Wednesday. I know what happened in that call because Dana was on it and called me immediately after. She said, he told them the discrepancies were a data normalization artifact from our platform modernization initiative. I said, he used that phrase with a client. She said, he used it twice. The second time, their accountant asked him to explain what data normalization meant in this context. I said, "What did he say?" She said, he said it was a technical term for the process of standardizing data formats across integrated systems. I said, "That's not wrong exactly." She said, their accountant has a master's degree in accounting and 20 years of experience. She said, "I understand what data normalization is. I'm asking what specifically went wrong with your client records." I said, "What did Derek say?" Dana said, he said they were optimizing the resolution pathway. I closed my eyes for 1 second. Dana said, "Elaine, they're pulling the account." I said, "When?" She said, "They're giving us until end of month. If we can't produce clean, verified transaction records for all 4 accounts by September 30th, they're transferring to another advisory firm. $47 million. $940,000 in annual fees. End of month was 12 days away. The financial failure, the one that moved the board from alarmed to activated, arrived in the form of a number that Robert Finch put together and presented to the board on Thursday of the second week. Direct remediation costs to date, $380,000. That included the Nexus team's emergency engineering hours, outside counsel fees, and my consulting retainer. Projected cost to fully restore the corrupted transaction records across all 847 affected accounts, an additional $1.2 million minimum, assuming the restoration was successful on the first attempt. The Hargrove account, if lost, $940,000 in annual fees, plus the reputational cost of a 9-year client relationship ending over a data migration failure. The FINRA reporting cycle was now 8 days away. If Callaway could not produce clean, auditable transaction records for the regulatory filing, the exposure was a formal examination, potential sanctions, and the kind of public record that advisory firm clients read very carefully before deciding where to keep their money. Robert presented that number to the board on Thursday afternoon. The board called an emergency session for Friday morning. Derek was in that session. He came out of it a different kind of quiet than the one he had gone in with. Paul texted me Friday afternoon. He said, "Board meeting ran 3 hours. Derek came out and went straight to his office. Hasn't spoken to anyone. Robert looks like he hasn't slept." I said, "How's the Nexus team?" He said, "They flew in 2 more engineers yesterday. They've been here since 6 a.m. I don't think they know what they're doing. I said, they don't. He said, how do you know? I said, because if they knew what they were doing, they wouldn't have built the system the way they built it. He said, Elaine, when are you coming back? I said, I'm not coming back. I'm consulting. He said, you know what I mean. I said, I know what you mean. He said, when? I said, when they're ready to have the right conversation. He said, what does that mean? I said, it means they haven't hit the bottom yet. He said, how much further down is the bottom? I said, the FINRA deadline is in 8 days. He said, oh. I said, yes. The regulatory failure arrived not as a single event, but as a deadline that got closer every day, while the people responsible for meeting it ran in smaller and smaller circles. FINRA's quarterly reporting cycle required Callaway to submit auditable transaction records for all client accounts by September 30th. The records had to be complete, accurate, and traceable, meaning every transaction had to have a clean audit trail from origination to confirmation. 847 accounts had corrupted date fields. The Nexus team's restoration attempt had successfully cleaned 203 of them. 644 remained. At their current pace, they would clean approximately 80 accounts per day. 644 accounts divided by 80 accounts per day was 8 days. The deadline was 8 days away. There was no margin. None. And that assumed the Nexus team's restoration process was accurate, which I had reason to doubt, because the same validation gap that had caused the original corruption was present in their restoration methodology. They were cleaning the records with the same flawed tool that had broken them. I had documented this in a memo I sent to Robert Finch on Friday afternoon. 1 page. 4 paragraphs. Very clear. Robert called me Saturday morning. He said, I read your memo. I said, good. He said, you're saying the Nexus restoration is going to fail. I said, I'm saying the restoration methodology has the same validation gap as the original migration. Whether it fails depends on whether anyone catches it before the deadline. He said, can you fix it? I said, yes. He said, how long? I said, with the right tools and full system access, I can restore all 847 accounts in 4 days. Clean, verified, FINRA ready. He said, for days. I said, yes. He said, the deadline is in 8 days. I said, I know. He said, Elaine, we need to talk about something more than a consulting engagement. I said, I know. He said, can you come in Monday? I said, who will be in the room? He said, me, the board chair, and Derek. I said, then yes. The meeting was in a conference room called Summit. 5th floor, the executive level, a room I had been in exactly twice in 10 years, once for a company-wide leadership presentation, and once when the previous CTO had asked me to walk the board through the CICRS architecture. The board chair was a woman named Margaret Osei. She was 63 years old, had been on the Callaway board for 11 years, and had the specific manner of someone who has sat through enough corporate disasters to recognize one in its early stages and enough board meetings to know when the person responsible for the disaster is also in the room. She was already seated when I arrived. Robert was next to her. Derek was at the far end of the table. He was wearing a gray suit. Not the burgundy, not the forest green. Gray. The color of someone who has stopped trying to make an impression and started trying to survive one. Margaret said, Elaine, thank you for coming. I said, of course. She said, I'll be direct. The board has reviewed the situation in full, including the memos you submitted in May and June. We understand the scope of what's happened, and we understand our role in allowing it to happen. I said, all right. She said, we'd like to discuss bringing you back to Callaway in a permanent capacity. Not as a consultant. As an executive. I said, I have conditions. She said, we expected you would. Please. I said, Vice President of Data Infrastructure. Not Director. Vice President, reporting directly to the board, not to the Director of Technology Operations. Margaret said, agreed. Derek said nothing. I said, base salary of $360,000 annually. My previous base had been $120,000. This was 3 times that. Robert said, that's a significant. Margaret said, Robert. Robert stopped. I said, $85,000 signing bonus. And a performance equity grant tied to clean audit outcomes if Callaway passes its next 3 FINRA examinations without a data-related finding. I receive a 1.5% equity stake in the firm. Margaret said, the equity structure is unusual for this role. I said, the role is unusual. I'm not being hired to maintain a system. I'm being hired to rebuild one that was destroyed and ensure it never happens again. The equity ties my compensation to the outcome you're paying me to produce. Margaret looked at Robert. Robert said, we can structure it. I said, full authority over all data infrastructure decisions. No technology vendor can be engaged without my written approval. No system changes can be implemented without my sign-off. If the director of technology operations wants to modernize something, it comes to me first. Derek said, that's a significant constraint on my... Derek, Margaret said. He stopped. I said, Paul Reyes returns as lead data systems analyst. His salary increases by 25%. He receives a written acknowledgement from the board recognizing his conduct during the transition period. Margaret said, done. I said, the CICRS architecture documentation is formally credited to me in Callaway's operational records. My name is on it. That does not change. Robert said, we can include that in the employment agreement. I said, and a formal incident report, documenting the decision to replace CICRS, the dates of my objection memos, the goal of decision, the scope of the data corruption, and the individuals who made each decision. It goes to the board, to legal, and to the permanent operational record. The room was quiet. Derek said, Elaine. I looked at him. He said, that report will have my name in it. Specifically, in a document that becomes part of the company's permanent record. I said, yes. He said, I can't agree to that. That's punitive. That's not a business requirement, that's... Derek, I said. He stopped. I said, 847 client accounts have corrupted transaction records. The FINRA deadline is in 6 days. Hargrove Capital Partners is 12 days from pulling $47 million. The board needs to understand how this happened so it cannot happen again. That is not punitive. That is operational. He said, there are other ways to document lessons learned without. Those are my conditions, I said. All of them. I don't negotiate individual items. He looked at Margaret. Margaret looked at him for a long moment. She said, Derek, the report is necessary. He said, Margaret. She said, it's necessary. He looked at the table. He said nothing. Margaret looked at me. She said, Elaine, you have our agreement. I said, then I'll start today. I did not smile. I did not need to. I stood, picked up my bag, and walked to the elevator. The 5th floor was quiet. The executive hallway had that particular stillness of a place where serious things have just been decided. I pressed the button for the 4th floor. The doors opened onto the workspace I had occupied for 10 years. Paul was at his desk. He looked up. He saw me. He stood up slowly, the way people stand when they're not sure if what they're seeing is real. I said, Vice President of Data Infrastructure. He said, you're back. I said, I'm back. He said, for real. I said, for real. He sat back down. Then he stood up again. Then he said, okay. Okay, what do we do first? I said, pull up the CICRS restoration documentation. The version from my personal archive, not the Nexus version. He said, you have a restoration path? I said, I've had it since June 4th. He said, the day after your second memo. I said, yes. He said, you built a restoration path the day after they ignored your warning. I said, I built it the day after I understood they were going to ignore my warning. He looked at me for a moment. He said, Elaine, that's either very zen or very scary. I said, you said that to me once before. He said, I remember. I said, the answer is still probably both. He laughed. It was a good laugh. The kind that comes out when tension has been held for a long time and finally has somewhere to go. I sat down at the desk that had been mine for 10 years, opened my laptop, and started the restoration. 7 months later, Callaway Financial Services looked different in ways that were structural and similar in ways that were intentional. The FINRA filing had been submitted on September 28th, 2 days before the deadline. Clean, verified, auditable. All 847 accounts restored. The examination that followed in November found 0 data-related findings. 0. The Hargrove Capital Partners account had been retained. I had called their accountant directly on the Monday I returned, walked her through the restoration methodology, and provided a written technical explanation of what had happened and how it had been corrected. She was thorough, as thorough people are, and she asked good questions. I answered every one of them. She sent me an email when the restoration was verified. It said, "This is what we expected from Callaway. Thank you for being the person who delivered it." I kept that email. Paul had settled into the lead data systems analyst role with the ease of someone who had been doing the work at that level for 2 years without the title or the pay. His 25% raise was in his first paycheck after my return. The written board acknowledgement was framed on his desk, which I had not suggested, but which I found entirely appropriate. He had also, in the 7 months since my return, identified and corrected 3 additional data integrity issues that had been introduced during the Nexus migration, but had not surfaced in the initial scope assessment. All 3 were caught before they affected client reporting. All 3 were documented, corrected, and disclosed to the relevant parties. That is what a functioning data infrastructure team looks like. I had implemented 2 new systems in the 7 months since my return. The first was the Callaway Technology Change Protocol, a formal governance process requiring written impact assessments, compliance review, and VP-level sign-off before any technology system affecting client data could be modified, replaced, or migrated. It was the process that would have stopped the Nexus project before it started. It existed now. The second was the Callaway Data Integrity Registry, a living document that tracked every automated process in the data infrastructure, with named owners, validation schedules, and escalation paths. Every trigger, every reconciliation cycle, every backup protocol was documented, named, and assigned. No institutional knowledge lived only in one person's head anymore, including mine. I had made sure of that specifically. Derek Moss was still at Callaway. He was no longer Director of Technology Operations. Margaret Osei had restructured the technology leadership in October, creating a new role called Director of Technology Strategy, which at Callaway meant Derek attended planning sessions, contributed to long-range roadmap discussions, and had no operational authority over any system that touched client data, compliance reporting, or data infrastructure. He had no authority over anything that touched my department. The Callaway Technology Change Protocol required my written approval for any technology initiative before it could proceed past the planning stage. Derek could propose. He could not implement. He had not spoken to me directly since the summit meeting. I did not require him to. The incident report had been completed in October and filed with the board. Derek's name was in it, as agreed. His decision to proceed with the Nexus migration over my written objections was documented. The dates of my memos were documented. The board's failure to ensure those memos reached the CFO was documented. The total scope of the data corruption was documented. It was accurate, complete, and would remain in Callaway's permanent operational record for as long as the company existed. The Nexus Data Solutions contract had been terminated in September, 2 weeks after my return. The termination included a clawback provision for the remediation costs Callaway had incurred as a direct result of the migration failure. Nexus disputed it. Their dispute was resolved in Callaway's favor in December. The total financial cost of the Nexus migration, calculated across the full period from go-live through the resolution of all remediation work, was $4.7 million. That included the Nexus contract cost, the remediation engineering hours, outside counsel fees, my consulting retainer, the board-level emergency sessions, the client recovery costs, and the premium compensation required to bring me back. To avoid listening to a 4-page memo I had submitted on June 3rd. The math, as I said, was patient. My sister came to visit in November. We had dinner at a restaurant near my house, the kind of place with good lighting and no televisions, and we talked for 3 hours about things that had nothing to do with data infrastructure or FINRA deadlines or conference rooms with no windows. At the end of dinner, she said, "You seem different." I said, "Different how?" She said, "Lighter. Like something you were carrying for a long time is gone." I thought about that. I said, "Something I was carrying for a long time is gone." She said, "The job." I said, "The version of the job where I had to fight to be heard." She said, "And now?" I said, "Now I don't have to fight. I just have to be right." Which I was already doing. She smiled. She said, "You were always going to be okay, you know." I said, "I know." She said, "You knew it then too." I said, "Yes." She said, "That's the part that gets me." "You knew?" I said, "I had the documentation." She laughed. It was the best laugh I had heard in a long time. I think about that Thursday morning sometimes. The main corporate line. For rings. Derek's voice, careful and controlled, trying to sound like a man managing a situation rather than a man who had just understood the full weight of what he had done. He said, "We have a situation." I said, "I know." I knew because I had written it down on June 3rd. I knew because I had built the restoration path on June 4th. I knew because I had saved the documentation, encrypted the drive, and set up the consulting rate before the rocket ship email had even been sent. He called my system outdated. He brought in a firm that used the phrase data democratization without defining it. He put a rocket ship in a company-wide email. And then, 72 hours after go live, he called from the main corporate line because he did not want the call on his personal record. That detail still matters to me. Not because it was clever, it was just instinct, the kind of instinct that comes from someone who knows, on some level, that they have done something they will need to explain later. But because it told me something important in the first ring of that call. He already knew. He just needed me to fix it. And I did. On my terms. At $400 an hour. If you've ever been underestimated at work, I hope this story reminds you that quiet preparation always beats loud arrogance. If this resonated, like and subscribe. I share stories like this every week. And remember, the most powerful thing you can do when someone calls your work outdated is write it down, take it home, and wait for the phone to ring.